Good morning and welcome to Top Gun Options Market Intel Brief. My name is Matthew Buckley, call sign Wiz, and I'm the Chief Strategy Officer here at TGO. Let's get started with today's Market Intel Brief. Home prices ready to rebound, and that's a question mark at the end of it. Today is March 19th, and it's going to be a great week of trading. Had a great weekend, very good weekend reading Barron's. They said home prices ready to rebound. Obviously, no question mark at the end of their title, folks. So let's take a look at what Barron's had to say and some potential options plays if you believe that Barron's is right. And also, let's take a look at if you believe Barron's is wrong, because they're wrong more often than they're right. Great publication, but nobody can be right 100% of the time. So let's take a look at our strategic mindset and our intel gathering. Folks, trading is combat. That's our motto here at Top Gun Options. Somebody's going to win and somebody's going to lose. Somebody is not getting to go home that night. And if you're just racing straight down to a tactic based on something you heard at the Waterloo or, Red and Barron's, you're doing it wrong. You have to do your own intelligence gathering, come up with your own strategic mindset, and only then can you select the tactic, the right weapon under the trigger, and squeeze that thing off downrange. That's how you know you selected the right target. So our intel gathering based on what Barron's had to say, home prices have fallen nearly 34% from 2006 highs. Nearly 7% of those were lost due to short sale or foreclosure. 7.4 trillion in homeowner equity wiped out. Absolutely unbelievable number there. And currently 14 million Americans are underwater. That means they owe more than their house is worth. Now, that 34% probably doesn't ring true with folks down here in South Florida, where we got hammered to the tune of 51%. Vegas was about 61%. And then Phoenix right around 55% off the high. Speaking of a Phoenix, well, that's what Barron's is talking about, rising from the ashes. Their strategic mindset is that there are signs that the housing nightmare is at a terminal stage, and maybe, just maybe, will bottom by the spring of 2013, if not sooner. Good news on the jobs front in the past 3 months-ish, and the economy. So they're, in my opinion, they're about half pregnant with this. But Barron's is a heavy financial publication. They're going out on a limb and saying, and they're calling it spring 2013, if not sooner. So let's take a look at some potential tactics, some trades that Barron's brought up over the weekend on Beazer, Toll Brothers. I'm going to talk about the XHB, easy for me to say, as well as maybe a potential pairs trade and going short something as we're long something else. So let's take a look at our trading platform. And you can go to trademonster.com/TGO to open a free paper trading account and check out their tools. Got some absolutely great tools, which some of which we will look at. Again, easy for me to say. Let's take a look at Beazer. Nice, strong climb in some serious headwinds. Obviously, we lost our credit rating. A lot of clown car stuff in Congress last year in that August, and that thing really hit the basement. Looks like it's kind of bottom there. Let's put the radar out to about 10 years, just so we can see how dramatic that was. Check that out. That's just absolutely insane. But there are signs of life in recent past. This is just, wow, just brings an absolute tear to my eye. So Beazer, how about Toll Brothers? Probably not as dramatic a drop here. Higher quality homes, exactly. Higher quality homes, not as big of a drop, but obviously did fall off the cart, so to speak, there. But here we go. Starting to see that sharp turnaround at a Toll Brothers as well. And let's take a look at the actual home builder index. That's the XHB, X-Ray Hotel Bravo. Obviously fell out of bed, and same thing. What are we seeing here? We're seeing a common theme here with not only Beazer and Toll Brothers, but the basket of stocks. That's what an ETF is basically a basket of stocks that you can own. So if you are bullish overall on the housing market, let's take a look at Toll Brothers, for example. They build high-quality homes. Their headquarters is right outside of Philly there in Pennsylvania. Let's take a look at the options. Now, Barron said, turn around by spring 2013. Well, that's great for us because guess what? There's January 14 options that are available. Let's get rid of our April series. What can you do if you believe Barron's is correct about the home prices? Well, let's take a look at the January 14 calls. Let's collapse this just to take a look at the call side. Closest strikes to being at the money are about the 25s. Toll Brothers as a closed business Friday, 24.70. right about here. Let's take a look at calls with the closest one to a 0.8 delta. Why? That's just one of our trading rules of engagement here at Top Gun Options, which you can learn about. Always like buying calls with at least a 0.8 delta, and that would be the 17 calls. What are they trading for? It's at about 9:45. That ain't cheap, right? Let's say you wanted to, go bullish on Toll Brothers in specific, and around the time frame Barron's talking about, you could buy some of these deep in the money leaps all the way out here in January 14. I'm cheap. We're cheap here at Top Gun Options. So what could we do to help offset the cost of those calls? Well, we could sell some front months. Barron's, to its credit, actually pointed out some headwinds there, right, folks? That their job still remains uncertain. What about mortgage lending standards? Have they gotten a little tighter? I mean, geez, folks, back in 2006, if you could fog a mirror, you got a loan. Now it's they put a rubber glove on, and it's not a pleasant experience. Even people with perfect credit right now find it hard to get a loan. So you could sell an upside call, maybe the 29s or the 28s here, for about, call it 50 cents or 45 cents, and keep selling those upside front month calls, just moving those strikes a little higher as the housing market slowly recovers. And by the time it rolls around to what Barron's talked about, they might be looking pretty sweet. So how about the XHB? You could just go bullish on the XHB and buy some deep in the money calls. But one of the things I want to talk about before we run out of time here, so I want to get to it, is Avalon Bay. Avalon Bay is a REIT. It does apartment buildings. Let's take a look at the chart of Avalon Bay. 10-year chart, obviously 2006. It kind of fell off the cliff with everybody else, but check this out. Avalon Bay has just been on a tear recently. Got some pullbacks, but again, we haven't seen these highs in Avalon Bay since just prior to the housing market. Potential pairs trade is to go short this Avalon Bay. I don't short stock. Don't recommend anybody short stock. That's reserved for the Jedi Masters. I use the options though. So if I was to get bearish or bullish on the housing market, I'd take a look at some of these apartment providers, because it is going to get to the point where the shadow inventory of homes is going to have to be wiped out for the housing market truly to recover. People might start leaving those apartments and say, hey, why am I paying rent on something when the home might actually get back to being an asset? Now, obviously, that mindset was destroyed in 2006 if people said, I'll use this as my retirement fund. I don't know if that's really disappeared from the American psyche, folks. So if that starts coming back and young folks start being able to get loans and leave those apartment communities, there's a potential pairs trade, maybe using the XHB and Avalon Bay there. So, folks, that's today's market intel brief. Make sure you stop by Top Gun Options. Check out our blog frequently. It's at topgunoptions.com intel/blog. So my name's Matthew Buckley with Monday's Market Intelligence Briefing. Happy hunting. Make sure you hedge.